Hi everyone, welcome back. In this episode, we're going to be talking about one of my favorite bottom picking positions, Shake Shack. Now, that being said, I think it's going to be an interesting name. Not many people notice restaurant stocks. Me personally, I don't really trade off restaurant stocks either, but when I see an opportunity, I just can't hands off it. So with that being said, let's turn our attention to the chart. This is in front of us an S&P 500 chart. It's an ETF trust. So we're looking at the benchmark index spider, and this is a daily chart. We have this pivot top all the way back in February. Let's put across, boom. And we have this V bottom, right? So here, that's the bottom of the pandemic in the late March. Let's put another cross. That's gonna be our reference point. Now, the stock has bounced back up. And as a matter of fact, we've been having 5 straight days of continuity breaching all-time high. So something like that is definitely going to be important. And in light of that, let's put a trend line. It's going to be our levitating resistance, and that's going to be our levitating support. Something like that, it's interesting. It shows us how the market is moving. It serves as guidance. And truth being told, this is going to be the most powerful equity market in the entire planet. So with that being said, let's turn our attention to Shake Shack. This is a daily chart of Shake Shack. Just on the surface, there's nothing interesting about this. We've been going up and down, lots of volatility. Couple of the days, the volume shoots up high, and this is not a consistently going up name. And you can take a look at that from weekly chart. This is going to be the weekly chart. As you can see, it's a much larger time frame, all the way from 2017. We have this base, right? This base is quite interesting from the IPO, considering we went all the way up to almost $100. It's gonna put some sort of resistance here. Once it's break, let's put it across. We have a small pop, pull back, moving average catch up. We can go again. So that's gonna be a vertical line. Let's put another vertical line. Boom. Something like that, it's interesting. Once this thing shoots up, it goes to $70, pull back deep into $41, and this is going to be a relatively bigger pullback, right? Not many people can endure this. If you're simply just trading off your beta, I don't think you're going to be able to want to hold on to this name. Chances are you're going to be getting stop loss somewhere here, if not getting stop loss somewhere here. If you hold all the way here, you're probably going to lose that patience and eventually get out. And then you're going to be looking at the stock going from $42 all the way to $105 without anything, which is why people come here and chasing high here and chasing high in this area. And as you can see, another contributing factor for this kind of spread is the lack of liquidity. Any given day, we're talking about 2 million shares, 3 million shares. So honestly speaking, not many people are trading off this name. If you look at the spread, it's probably going to be 20 cents, 30 cents, sometimes even 50 cents. So that's not going to be fun. That's not going to be pretty. If you keystroke, press the wrong key, you're probably going to get shaken out of your position, and that's going to be already thousands of dollars of loss. So it's going to be a hard name to trade. Now, me personally, when it comes to this kind of name, you want to keep it tight. You want to keep your risk small. So how do you do that? You look at the percentage, right? If you have $100, you can probably dedicate $5 for that. But I wouldn't dedicate more than $10, $20 out of a $100 portfolio for this name. So with that being said, let's take a look at the recent performance. Now we have a couple of drops here. Let's put a vertical line. A couple of drops here. Let's put a vertical line. Something like that, it's interesting. Well, the first drop is because they have bad news. They have bad earnings. Their burger is not great, and they probably have low quality. Probably used somewhere else. That's not cool. So the stock performance definitely took a hit, and that's reflected on the price. The second drop is because of the pandemic, because of the COVID, right? Places are shutting down, nobody go out and eat. And due to that fact, you have less sales. When you have less sales, you have less earnings. So both drops pretty straightforward. It doesn't mean that it's a bad business model. It's just unique nature due to the fact of this business strategy. So with that being said, it's not the case that this entire thing was just going to be dead, right? If you look at QSR, that's a restaurant name. Bill Ackman is in this name. Warren Buffett is in this name. We have this bottom in mid-March along with the market, and it bounced back up. Now it looks healthy. You look at CMG, Chipotle Mexican Grill. Look at that bounce back, right? Now it's all-time high, over $1,000, something like that. It's interesting. Now Chipotle has a unique business model that Shake Shack may or may not have. For Chipotle, you don't necessarily go in there, sit down, and have a nice time, right? You probably just want to grab your wrap and go. So their business model is uniquely tuned to survive pandemic, survive COVID. That's going to be extremely important. So when they bounce back up, it's fast and furious. Now, if you're going to pick any bottom, I think Shake Shack is going to be interesting. Me personally, obviously, I didn't buy in mid-March. I could have jumped in the gun along with the market, along when I get back in, but I decided not to because I know this is not a leading name, right? If my bet was wrong on the market, then perhaps this thing is going to go down further. So I didn't really get in there. Let's take a look at the daily chart. I watched the spot here. Obviously, I missed that. Let's put a horizontal line. That's going to be a reference point, $45. I think around $45, as long as it held, it's pretty much viable. As long as you like the name, you have a good thesis, you see a potential of bouncing back up as soon as places are opening, then I think there could be a potential trade. So I think the buy spot for me is going to be here, as well as this spot in mid-August. Let's put a vertical line, boom. Something like that is interesting. Now the stock is $63. It's already breaching this previous resistance. Let's put a horizontal line. And I think the next resistance is going to be $76. Let's put another horizontal line, boom. Something like that, it's interesting. I think that could serve as guidance, yeah? And I think it could be potentially a good trade along to the $70 range. And it could potentially even be turning into an investment opportunity. So if you're interested in that, you can take a look at the weekly chart. And then you can do a little bit of Monte Carlo simulation, which plotted out, it will probably look something like that, right? If it goes down, probably go back down $33. If it goes up, probably go back up to $100. And that's going to be a wide range that you're playing around with. You're looking at the variation in the past 2-3 years, looking at the expected return in the past 2-3 years, I think that's probably going to be a range to go. Now, if you're going to bet on the way up, then perhaps a midpoint is going to be 80. Let's put a horizontal line. That's the benchmark. That's the standard. So these are the price points that you should be looking at. It's confirmed empirically. It's confirmed due to the thesis. So there you go. I hope you liked this episode. If you want to support the channel, give it a like and hit that subscribe button. And I'll see you in the next episode.